Hello and welcome to the week ahead video with myself, David Madden. Now before we take a look at the major events of next week, let's just take a moment to quickly recap the major events of the week just gone. And it's been a busy few days in the financial markets. On Wednesday, the Federal Reserve carried out a dovish hike whereby they lifted interest rates by 0.75%, meeting expectations, but the US Central Bank also said in its press conference it might look to scale back the size of future rate hikes down the line. Yesterday and Thursday, it was reported that the US economy contracted by 0.9% in the second quarter, making it the second consecutive quarter of negative growth, which means the US is in a technical recession. That increased speculation that the Federal Reserve might look to cool down the rate at which they're hiking interest rates, and as a result we saw a sharp rally in US stock markets and we saw weakness in the US dollar. Now, why is this important? Well, looking ahead to next week, on Friday we have the US non-farm payrolls report. As I mentioned, the US economy has entered a technical recession, and people are going to be wondering, looking at the jobs reports, thinking to themselves, how are the Fed going to react to this? There's already speculation that the Fed might look to ease the rate at which it's lifting interest rates, so we could see some volatility being injected to the markets on Friday when the US non-farm payrolls report is announced. Looking at the price action of the US500, we can see here that it's been trending higher recently. Momentum is firmly in positive territory, indicating that the bulls are in control. While we continue to hold above all three of these simple moving averages, it's likely the recent upward trend will continue. A further rally from here could see a target 41.44, and a break up beyond that could see a target 41.89. Looking at the RSI, we can see it's increased. In fact, it's actually moved into overbought territory. So that could be a kind of a flash warning that the recent upward move in price has become overstretched. That is a possibility. If we do see a move to the downside in the US 500, support could be found from this zone here at 39.92. And a break below that could see us back down toward this zone here at 39.66. As I mentioned, we saw, in light of what's going on with the Federal Reserve and yesterday's US GDP reading, we've also seen a sharp decline in the US dollar. And we can see here that GBPUSD pound dollar has recently hit its highest level. Since late June. So it really kind of speaks to how bullish GBPUSD has been, largely down to weakness in the US dollar. On Thursday, we have the interest rate decision from the Bank of England. That's why GBPUSD will be in focus next week. Andrew Bailey, the head of the Bank of England, said in the last few weeks that a 50 basis point interest rate hike by the Bank of England is on the table. There's no guarantees that it'll go ahead with it, but just the very fact that we mentioned that shows you what the central banker is thinking. Looking at the price action here of GBPUSD, it's been trending higher recently. It recently hit a multi-week high. Looking at the moving averages, we're comfortably above all three of these simple moving averages. While we continue to hold above these moving averages, it's likely the more medium-term upward trend will continue. A further rally from here could see a target 1.2283, and a break beyond that could see a target 1.2331. Looking at the price action recently, we can see we've retreated a lot from the recent peak. Also, the relatively long wick in this candle here could be a sign of indecision. Looking at the MACD indicator, we can see there's been a steady decline in positive momentum. So, although the bulls are in control, they're not as influential as they once were. If we do see a pullback in GBPUSD from here, support could be found from this zone at 1.2030, and a break below that could see us back down toward this zone here at 1.1964. So just to remind you, on Thursday we have the Bank of England interest rate decision, and on Friday we have the US non-farm payroll support. Thank you very much.